And welcome back. It's Jason Walty here, and here's your latest housing market forecast through December 2023 based on a new report from Corelogic that was just announced last week. They also provide some insights regarding home prices nationwide, as well as the statewide level, as well as the citywide level as well. And stay tuned toward the end of this video, because I'm going to be sharing the top 5 markets in which they anticipate that home prices are going to decrease over the next 12 months. And with that said, let's go ahead and dive right in. I have a lot to share. I can't talk. Anyways, this is based on a report from Corelogic here. And this is a report they publish on a monthly basis going back from quite some time now. And they provide some analysis regarding home prices as of December 2022, as well as forecasts through December 2023. And also, by the way, when I'm talking about home prices in today's video, this is based on Corelogic's HPI, or their home price index. Again, this is published on a monthly basis, and they provide an analysis regarding home prices on a national level, a statewide level, as well as a metro level as well. So let's talk about what happened in December 2022 compared to last month, as well as compared to December 2021. And they're going to be sharing their forecast here very briefly here. They say here home prices nationwide, including distressed home sales, increased year over year by 6.9% in December 2022 compared to December 2021. However, though, on a month-over-month basis, home prices decreased by 0.4% compared to November of 2022. One thing I do want to mention regarding changes on a year-over-year basis is that it really doesn't tell us the trajectory of our housing market, right? Because this year-over-year increase from December 2021 through December 2022 is an increase by 6.9%. However, though, we saw a big increase in the first half of 2022, and then that was followed by a big decrease in the second half of 2022. So I don't want you guys to watch this video and think, oh, home prices are still increasing, because we still have a gain of 6.9% on a year-over-year basis. However, of course, if you guys follow the channel, of course, home prices have been more or less decreasing ever since May and June of last year. So before I share Corelogic's housing market forecast through December 2023, I actually want to provide you guys some insights regarding what their previous forecasts were. So back in April, for April 2022 through April 2023, they called for home prices, or their HPI, to increase by 5.6%. And that was their first year-over-year downgrade in 2022. In May, from May 2022 through May of 2023, their housing market forecast was an increase of 5% for home prices. And that was their second consecutive downward revision in their 12-month housing market forecast. In June, they called for home prices to increase by 4.3%. And that was their third downward revision. In July, they called for a 3.8% increase over the next 12 months. And that was their fourth downgrade so far in 2022. In August, they called for a 3.2% increase in home prices through August of 2023. And that was their fifth straight downward revision in their 12-month housing market forecast. In September, they actually called for a 3.9% rise in home prices, and that was their first upward revision in their 12-month housing market forecast, going from 3.2% to 3.9%. Then in October, they called for a 4.1% increase. In November, a 2.8% increase, and that was their first downward revision in the last 3 months. So for December 2022 through December 2023, Corelogic is predicting that home prices are going to increase by 3%. This is actually their third upward revision in the last 4 months. And here's our forecast right here, calling for a 3% increase in home prices through December 2023. However, though, on a month-to-month basis, which is December 2022 through January of 2023, they're calling for their HPI to decrease by 0.2%. And also, when looking at this 3% increase in their forecast here over the next 12 months is obviously much less than the current rates we have right now at 6.9%. I shouldn't say right now. This is home prices from December 2021 through December 2022. Based on their analysis here, it increased by 6.9% on a national level. And Corelogic says the effect of rising mortgage rates, I have more to share regarding that here in just a little bit. The effect of rising mortgage rates on housing demand in 2022 became even more evident in December, with annual home price growth dipping to 6.9%, down from a series high of a 20% increase in April. So from April 2021 through April 2022, their HPI increased by 20%, wherein last December we saw a 6.9% increase in home prices. On top of that, only 9 states in the US registered double-digit year-over-year increases in December, compared with 48 that posted double-digit gains in April of last year. In other words, the housing market was in full swing back in April, given the fact we saw double-digit increases in home prices in 48 of the 50 states, and now there's only 9 states which are posting double-digit increases right now. Corelogic also says here, with the national unemployment rate remained at a low of 3.5% in December, layoffs may be affecting housing demand in some expensive metro areas, particularly those that rely heavily on the tech industry. So for example, San Francisco and Seattle posted significant home price deceleration in November. Another way to say that, of course, is home price decreases and not deceleration. My least favorite word of 2022, deceleration. Why can't we just call it home prices decreasing and not deceleration? Anyways, regarding San Francisco, I want to share this with you guys very briefly here. This is based on a video I made for you guys probably 2 weeks ago regarding home price changes in California. So check this out, because in the San Francisco Bay Area for December 2022, and by the way, this is based on data from the California Association of Realtors regarding the median sold price for single-family detached houses only. So in the San Francisco Bay Area, the median sold price in December 2022 was just under $1.1 million. This is actually a 2-year low, or nearly a 2-year low, because this is the lowest levels going back all the way until January 2021, when at that time the median sold price was $1.05 million. Now it's $1.08 million right now, nearly a 2-year low. On top of that, when comparing home prices in December 2022 compared to the peak in the Bay Area, and by the way, the peak was in April 2022 when the median sold price was $1.54 million. Therefore, compared to the peak, home prices in the Bay Area have decreased by about 30%. And that equates to a decrease of $455,000 ever since April of last year. So because they had such a big, significant decrease in home prices ever since April of last year, the year-over-year change from December 2021 through December 2022 is actually a 10% decrease in the Bay Area. Also, in comparing prices compared to 2 years ago, that's more or less flat, only a gain of 3% over the past 2 years. Also, compared to December 2019, 3 years ago, home prices have only increased by 19%. And obviously, the San Francisco Bay Area relies heavily on the tech industry. Also in San Francisco, home prices have decreased by about 24% compared to the peak of 2022. And also on a year-over-year basis, they're down by 7%. And also compared to 2 years ago, they're down by 1%. So the gains over the past, over the gains in 2021 and also in the first half of 2022 have been virtually wiped out due to the fact that home prices decreased so much in the second half of 2022. And going back to Corelogic report here, they say here the continued slowing of home prices at the end of 2022 reflects weaker housing market demand, primarily caused by higher mortgage rates and a more pessimistic economic outlook in general. But while home prices continue to fall from November, the rate of a decline was lower than last seen in the summer months. So take a look at this, because when looking at home sold prices according to Redfin, of course we reached all-time record highs more or less in June last year. We saw a sharp decrease in home prices ever since really June, all the way until we hit more or less November. I would say at the end of October. But ever since then, home prices have been more or less kind of flattening out. We're not seeing a huge decreases in home prices like we saw back in the summer months. and the fall months of 2022. We also continue to see this as well because when looking at this year, this is the blue line right here, home prices are still decreasing, but not at the same rate of decline that we saw back in the summer months of last year. And this is one reason why the median sold price in the US is still up by 1% compared to 12 months ago. In my personal opinion, one of the main reasons why we're not seeing home prices more or less tank like we saw back in 2022 is because inventory has actually been decreasing ever since really November of last year. So even though we have more houses listed for sale right now compared to the past couple of years, we're still at very low levels historically speaking. Let me share exactly what I mean by that, because here's altosresearch.com. As you can see right here, this is a 7-day average, which is a dotted line. We have approximately, 443,000 houses for sale. But going back more or less to the beginning of November, we had approximately 575,000 houses for sale. So housing inventory nationwide has been more or less decreasing ever since November last year. There's 2 points I want to mention regarding this is that housing inventory tends to decrease in the winter months each year. So this is our seasonality for housing market, where inventory levels tend to decrease in the winter months, just like we saw 12 months ago. However, though, if inventory levels were absolutely skyrocketing, if this line here was continuing to rise greatly, that would be a recipe for disaster and a potential housing market crash. However, we're not seeing that though because housing inventory has been more or less decreasing ever since November of last year. Now, of course, don't get me wrong, I'm not saying our housing market is without its challenges. In my personal opinion, the biggest risk to our housing market right now is due to a lack of housing affordability because rates are more or less double compared to 12 months ago. In any case, let's get back to Corelogic report here. They said that Idaho was the only state to post an annual decrease in home prices compared to December 2021. So only one state posted a decrease in home prices over the last 12 months. That's according to Corelogic. However, when looking at stats from the California Association of Realtors, though, for December 2022, home prices, or the median sold price in California has decreased by about 3%. In contrast, here are the states that posted the biggest increases in home prices over the last 12 months. Florida led the nation with a 15.2% increase. This is, by the way, home prices from December 2021 through December 2022. Florida, an increase of 15.2%. Vermont, a gain of 13.5%. South Carolina, 12.2%. Maine, an increase of 11.4%. North Carolina, 10.9%, as well as Georgia at 10.9%. Arkansas, 10.8%. Indiana, 10.6%. Tennessee at 10%. And Alabama at 9.9%. And here's a map of the US which show home price changes over the last 12 months. As you can see right here, the southern states here posted the biggest increases in home prices over the last 12 months. In contrast, though, the western states posted the smallest increases in home prices of less than 5%. Corelogic also provides some insights regarding some of the 10 largest cities in the US. And of course, there's some very, very big differences here. Look at Miami, Florida, a gain of 19.5%. Whereas in Washington, D.C., only a gain of 3.4%. Also look at these single-digit gains in the West. San Diego, an increase of 4.5% in December 2022. LA up by 3.1%. Vegas, a gain of 4.7%. Phoenix, Arizona, a gain of 5%. Denver at 3.9%. Houston, Texas at a gain of 8.7%. And Boston, Massachusetts, a gain of 4%. Whereas in Chicago, only an increase by 5.8%. Corelogic also provides some insights regarding the top 5 markets in which they believe that home prices are going to decrease over the next 12 months. And by the way, these are all a very high probability, above a 70% probability of home prices decreasing. Number 1 was Salem, Oregon, followed by Bellingham, Washington, then Bremerton, Silverdale, Washington, Crestview, Fort Walton Beach, and Destin, Florida, as well as Olympia, Washington, rounding out the top 5. To me, it's interesting to see that 4 of these markets are located in the West, and 3 of them are located in Washington State. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value this video whatsoever, then please hit the like button. I greatly appreciate that. And of course, appreciate you. Hope you guys have an awesome day. Look forward to seeing you in the next video.